Hello guys and welcome to again to my channel, YouTube channel. So this is supposedly a video supplemental to my internal control episode. So I have here the thumbnail for the internal control lecture that I've made. So if you wanted to visit that first, then go ahead, find it on my YouTube channel, and please subscribe, by the way. And if you find this thumbnail, you can watch it, or you can wait for this video to end or skip to the end. And there will be some suggested videos right there. And one of the suggested videos is the internal control. Why is it related to internal control? So these transaction cycles are actually the processes on how to process repetitive processes. These are processes or steps in order to process business transactions. Okay? And for example, we're gonna talk about here first the purchase and payment cycle. Now, a lot of what do you call this? No, not a lot. Most of the organizations, of course, have to purchase something. Purchase of supplies, purchase of inventory, we do not care. They are purchasing. The organizations are purchasing. Now, that particular transaction of purchasing should have a step-by-step process, right? So that's what we're gonna talk about right here. And aside from purchasing, normally, the companies are now purchasing on account. Okay? So if we are purchasing on account, of course, we have to pay sooner or later or in the future. The payment has also steps. Okay? So that's what we're going to talk about right here, transaction cycles. And aside from purchase and payment cycle, we have the usual also, sales and collection cycle. Of course, there is a process on selling. So we're talking about not just selling of goods, but also selling of services or commodities or other, like for example, utilities. So this is general in nature. So those are the two things that are usually occurring in organizations. Okay? So that's our topic for today. Now, going back to the question, why is internal control related to this topic? It is because this step-by-step process that I'm gonna discuss later should have an infused knowledge about internal control, because when you design this, so by the way, this is for the ones who will design systems, design processes, and of course auditors also, because the auditors tend to analyze the auditees transaction cycles also. Okay? So if you wanted to design a step-by-step process on these transactions, you need to know internal control concept so that you can infuse it here. Okay? So again, if you did not, or if you're not confident yet of the internal control knowledge that you have, you can go to the end of this video, click on one of the suggested videos. I guess the title is Beyond Internal Controls Beyond, I don't know. I have forgotten it. But it is on the suggested videos. Now, the third one maybe is this one, the payroll cycle. So those are the topics that we're gonna talk about here. And let me emphasize, they are cycles. It is because it starts from step 1 and of course step 2, step 3 until the end, and then it repeats again because these transactions are repetitive. Okay? Now, so in these three, we have to start with the purchase and payment cycle. But before we start again, I have another thing to say to you. I'm not a good artist, so don't judge me. Don't judge my drawing, okay? So let's start with purchasing and payment cycle. Normally, in some companies, it starts with, most of the company starts it with making a purchase request. So who will be the one who will make such request? Of course, those that needs something, needs items, needs an equipment, needs supplies, those who are in need will make this purchase request. Okay? And sometimes, they are separating purchase request with job order request. So, this purchase request is for items basically. The job order request is for labor, like for example, repairs that needs to be done by the requestor. Let's call it requestor. But basically, the requestor is the party in need of something. Like for example, I work in a finance department. Of course, finance needs supplies like paper, bond paper. So, if I am the ones in need of bond paper, I become the requestor and I make this purchase request. Okay? So, there are three copies normally. The first one is to be retained by the requestor himself, and the second one will be forwarded to the purchasing department. Purchasing department. Now, such purchasing department will check if ever there are items still, like for example, maybe in the warehouse there are still supplies like bond paper. So it will not need to make a PO already. It will release, it will communicate with the warehouseman, and then the warehouseman will release the requested items. Basically, it's just like that, right? But in this particular discussion, let's assume that the requestor is in need of something unique. So there are no items in the warehouse for this one. So, of course, like for example, photo paper. Photo paper. And usually, the company does not need this particular supply. So the requester in need needs photo paper. It submitted a purchase request to the purchasing department, and the purchasing department will process such request. So the first one, the purchasing department might approve or not approve the purchase request, especially if it is unusual, it is extravagant, and it is not necessarily needed in the business operations. It will be rejected. Okay? But normally, the purchase request is submitted first to the department head by the requester, unless the department head is the requester also. So, after the approval of the department head, because the department head would need to assess whether this requester's purchase request is indeed needed in the department or the business operations. So, basically, the department head approves the necessity of the items requested by the requestor. So, after approval, it will go to the purchasing department, and sometimes, again, the purchasing department can approve or not. Okay? So, basically, if ever it is really needed, so it will be approved. What will happen next is that the purchasing department will canvass the item requested by the requestor. So, for example, in the canvassing, there will be 3 suppliers or 4 suppliers that will be contacted, and those suppliers will tend to give their quotes related to the requestor's need, and then, of course, they will give it to the purchasing department, and the purchasing department will choose between these possible suppliers. Okay? And these possible suppliers, you will check the quality of the goods that they are offering, or the brand, if ever, and of course the price. So, normally, it's the balance between the quality and the price. Okay? It's not good if ever you're just looking always for the price, for the lowest price. So, basically, I'm telling you, purchasing department needs to canvass. Unless that particular item has been recurring already. So, the purchasing department has already a knowledge. Sometimes the companies gives judgment, gives what do you call this, power for the purchaser to make judgments or calls, especially if the items are already recurring and that the purchaser already knows where is the supplier that has a good quality products and good pricing. Okay? That's what I know of. But some of the companies are also very strict on this canvas. Like every time you purchase something, it needs to be canvassed, even if it is recurring and even if the purchaser already knows who are the ones who are giving those items with good quality and with good price. Okay? Now, talking about that, I would like to highlight that these particular processes that we're going to talk about here, that we are talking about currently, is not fixed in companies. Sometimes they are adding something here in the cycle to make the internal control better. Sometimes they eliminate the processes to make their transaction cycle efficient also. But then again, I would like to give you the overview of how the transactions are normally processed. Okay? Now, we have the purchasing department, canvas, and then after the canvas, consider the quality or the brand and the price, and we will have a winner. Right? And the winner will receive the purchase order. So the purchase order also is being made by the purchasing officer, but sometimes it is yet to be approved by what do we call this? Higher ups, the members of the management. Okay? But basically, let's assume that the purchasing department has the discretion of having this PO without any approval at all. So that particular PO, the PO will be, one copy of the PO will be left with the purchasing department. The other one will go to the supplier. The PO that will go to the supplier. No, no, no. I'm so sorry for my drawings. So it will go to the supplier, the purchasing department will retain one, and then the other one will go to the accounting department. So the accounting department will have one of those POs. Okay? I guess you can understand that, but I'm so sorry for my drawing. So we have one copy retained by the purchasing department, one copy will go to the supplier, and one copy will go to the accounting department. Okay? Now, of course, the next step would be, since there is already a purchase order signed by the supplier, then there is a contract already. Wherein the winning supplier, if he signed or if it's signed, if it is a company, has now an obligation to deliver the items. Okay? Now, upon delivery, the supplier will tend to deliver the goods. Two things, goods and the charge invoice. If they're using charge invoice or delivery receipt, or sometimes it's considered a sales invoice. So we have the actual items or the goods themselves. So that particular first one will go to the receiving department. So it could be a different type of department, or it could be the user themselves immediately. But basically, if you wanted to have a good internal control, it should go to the receiving department first, and that receiving department should have people who are good at checking the items, especially if we're talking about equipments, like computer equipments or machines, something like that. So you should have some technicians who will inspect the machinery and goods. Okay? So that's the receiving department. And then, before we go to the, let's go to the receiving department. When the receiving department receives such goods, it will make a receiving report. Of course, it is assumed that the receiving department did not know of the original description of the items that were ordered in the PO, so that the receiving department will really check. Because if you are going to give a purchase order to the receiving department with the item descriptions and the quantity, the color, and etc., of course, this receiver or the receiving department will not check already the items. So basically, receiving department should only receive the goods, no other paper, no description, no quantity at all, so that the receiving department will really count, and the receiving department will really inspect, and the receiving department will have a reliable receiving report. Okay? Now, how about this charge invoice, delivery receipt, and sales invoice? This charge invoice, delivery receipt, and sales invoice normally goes to the accounting department. So the accounting department now has purchase order, charge invoice, delivery receipt, and or sales invoice, or. So these are or, either or of those three. Okay? Now, since it's already in the receiving department, the receiving report, there will be a copy of receiving report that will be left with the receiving department, and the other one will go to the accounting department. So, right now, the accounting department has the purchase order with the charge invoice or delivery receipt, sales invoice, and the receiving report. Normally, the accounting department will tend to compare the purchase order, the details in the purchase order, and the quantity. And if it is in working condition, based on the receiving report, this receiving report, these three plus the purchase order, the accounting department will match it. And if there are no discrepancies, then the accounting department can now process for payment. Okay? But before processing for payment, because we're still in the purchasing cycle, not yet in the payment cycle, let's go right here. Okay? So on the receiving department, if all goes well, the PO, the delivery receipt, charge invoice or sales invoice, and the receiving report matches together, including the descriptions and the quantity, then the receiving department will endorse such goods to the warehouse man. So if this is a big company, there is a warehouse. So the warehouse man will receive those goods, and it will make a document control on these goods that are received. Okay? And normally, this warehouse man also makes tags, if ever that's a machinery or equipment. Tags, like, for example, you bought some air conditioner. So there will be a tag in that particular air conditioner, like what is the brand, what is the color, when was it purchased or received, and then what is the historical cost, and what is the normal life of that asset. Okay? Life, that means the number of years in which that is usable. So there is inventory tagging here that will happen in the warehouse in the warehouse. Now, after everything, document control and everything, this will be endorsed to the requestor. And the requestor will also sign that he has or she has received the item. So that's again the purchasing cycle. Okay? So how about the payment cycle? So again, the accounting department, of course, matches the details in the PO, the charge invoice, delivery receipt, sales invoice, and the receiving report. And if it is already good, normally the accounting department will make a disbursement voucher. That is a document that it is as if an order to pay already because everything is good. Okay? So, normally, the disbursement voucher comes first for signature, and then after that disbursement voucher, you have here the receiving report, and then the delivery receipt or charge invoice or sales invoice, and then the purchase order. So the purchase order is very important because that is the contract between you and your supplier. Now, mostly, some of the companies does not only start with PO, they also start with PR. So everything is stuck together until the disbursement voucher. And that if this is already complete, it will now go to another department known as the Treasury Department or the Finance. So, let me emphasize that the Treasury Department is the ones who are maintaining the cash of the company, the bank balances, the passbooks, the bonds, if ever there are bonds. So that's the Treasury Department or Finance Department. And it is very much separated with the Accounting Department because as you already know, as I have repeated always in my internal control lecture video, there should be separation of duties. Okay, so the custody of assets, as well as the recording function, as well as the authorization function should be separated. Otherwise, there will be a problem. Okay, so this treasury department should be separated from the accounting department because the accounting department should only maintain records. Okay, so if this set has been approved already, it will go to the treasury department, and that the treasury department will print a check. Okay, a check. So there will be a duplicate copy of that check that will be attached here, and the original check will be submitted to the supplier. Of course, when submitting the check to the supplier, normally the disbursement voucher and the attachments also will be sent to the supplier so that the supplier will assign that it has received the check in the disbursement voucher. Something like that. So that's how purchasing and payment cycle works. But then again, there might be some additional steps depending on the top management so that it will strengthen their internal control. Like for example, so we have the requester here, and if the requester wants to pay or not wants to purchase an item that is expensive, like it's a machinery, it's an equipment, sometimes the approval of the purchase request does not only need the department head's approval, but also the president of the company or as the vice president for finance, something like that, or the heads. Okay? So, it's up to the management on how are they going to strengthen their internal control. But basically, this is a good reference already if you wanted to become a systems designer. Okay? Now, let's move forward to the sales and collection cycle. But then again, let me repeat, normally there is purchase request or job order request approved by the department head from the requestor, and then it will go to the purchasing department in which the purchasing department has to canvas for the item in order to get the good quality and the price, affordable price. And then if ever there are already winners in the canvassing, it will make a purchase order. And then after having the purchase order approved, it will retain one for its own consumption. The other one will go to the supplier. And the third one will go to the accounting department. But these particular POs should be sent first to the supplier because the supplier should sign it, the 3 copies, because that serves as a contract. And after that one, the supplier will now arrange for the sending of goods to the company. So the supplier will tend to give these goods and these particular documents The goods will now be sent to the receiving department, and the receiving department will have to check the condition, the description, and the quantity of the items being sent. And then, from the receiving department, if all is well, it will draft a receiving report, it will leave a receiving report copy in its department, and send one to the accounting department so that the accounting department will be able to compare the description, the quantity, the conditions of the PO, the delivery receipt, charge invoice or sales invoice, and the receiving report. And if everything is good, the receiving department will give that to the warehouse man, wherein, or property custodian, I don't know. So there are some companies that uses property custodian. So the warehouse man or the property custodian will inventory tag those items if it is proper to inventory tag them and then give them to the requester. Something like that. So that's the purchasing cycle. And as to payment, normally if everything is already good, then the accounting department will make a disbursement voucher. It's an order to print checks already. And disbursement voucher along with the attachments will now be sent to the Treasury Department, in which the Treasury Department will make a check, and the original check will be sent to the supplier, and the duplicate check will be left here with the stack of documents so that these particular documents in one set is considered an evidence of what do you call this? An evidence of transaction. Okay? Now, I cut the video first because I guess the time capacity of my video recorder is limited. Okay, so I've cut it. So basically, before we cut, we have already uh, talked about the purchase and payment cycle. Okay, now let's go forward to the next one. So for the next one, we have the sales and collection cycle. So on the sales and collection cycle, there are also different departments that we have to draw. Okay? So in a business organization, normally there are two types of personas that a company is stepping in. Okay, so the first one, it is a purchaser. The second one, it is a seller of goods or services. Okay, so what will happen if you sell goods or services? So basically, the first one is that you will receive the purchase order from the customer. So you will receive this. Remember earlier, as a purchaser, we sent purchase order to the supplier, right? So let's change our footstep already. Let's go to the seller. So if we are the seller, we will receive purchase orders from the customers. Okay? And such purchase orders normally will be sent first to the credit department. So the credit department will be the ones in charge of approving this purchase order or not. Why? The credit department's role is basically maintaining the records of the customers, of how much are they indebted already, how much credit did they enjoy already. Because sometimes there is a credit limit. Like for example, this purchase order is from company A. Sometimes company A, the credit limit, for example, is 2 million. And that this purchase order is 500,000. And that company A did not yet settle its outstanding obligations worth 2 million also. So meaning, company A has already reached its credit limit, right? So what will happen is, the credit department will not approve the purchase order and will tell company A, pay first before we grant your purchase order some items. Okay? So normally, what do you call this? The purchase order will still be approved by the credit department. Now, For example, if it is approved already, then the credit department will now make an approved sales order. So the approved sales order, that means it is already approved that company A shall receive what it ordered. Okay? So that's approved sales order. One of the copies of the approved sales order normally goes to the accounting department. So that the accounting department will know what are those POs. Normally, the PO is also attached. The purchase order, if it is approved, it becomes an approved sales order already. And the other one will go to the warehouse, whereby the warehouse man will tend to take a look at the items in the sales order, the approved sales order, and then it determines the availability of those items. Is it available or not? And in this particular discussion, let's assume that there is availability. So what will happen is, warehouse man will get those items. So I don't know, let's draw a card. We'll get those items related to the sales order. The items listed in the sales order, the warehouse man will get it. Okay? And after that, it will make a report, warehouse report, in which it will state what are the items that were withdrawn from his warehouse. Okay? And then we have the sales order, and then the warehouse report will go to the accounting department, and that one of the copies will be retained by the warehouse man because it's his accountability. Those items that are stored in his warehouse is his accountability. Okay? And after which, it will be sent to the shipping department. So the shipping department will now secure the items, like make a good packaging. Shipping and packaging. So normally that's packaging. Of course, the shipping department will also wait for the accounting department. Why? Because the accounting department shall look at the PO, the details in the PO, the approved sales order, and the warehouse report. If it's good, it will print a sales invoice or a charge invoice or a delivery receipt to go with the package. Okay? So the shipping department has now two things: the items that were packaged and the document, sales invoice or charge invoice or delivery receipt. Okay? Now, it will now be delivered to the company A, which is the customer. And you already know what will happen with that packaged goods and those items there, right? So, we don't care about what happens to company A already because we have already finished the purchase and payment cycle. Okay? Now, let's go to the point of view again of the seller. So, it will be sent. After sending that, we will wait for the payment. Okay? So, for example, if the payment is by way of check, so the check from company A, collection cycle, we're now on the collection cycle. But before first of the collection cycle, after the accounting department has the PO, has the approved sales order, has the warehouse report, and has printed already the sales invoice and the charge invoice and the delivery receipt, and that the accounting department is already sure that the goods have already been shipped. Okay? And normally the shipping terms is FOB shipping point. It will now have an entry of accounts receivable, credit sales. But normally, in the accounting department in the real life, it will not check already if it is already shipped. The moment that the accounting department prints the sales invoice, charge invoice, or delivery receipt, it will now have an entry, accounts receivable, credit sales. Okay? Of course, the shipping terms will only be good for at the year end. If ever there are some goods that were sold on December 31, because sometimes you might be wrong on having an entry. It could be the entry should be on the January of the next year, or something like that. Okay? But basically, in the real life, if ever the accounting department prints already some sales invoice, charge invoice, or delivery receipt, it will now make an entry, accounts receivable, credit sales. Okay? Now, after that, let's wait for company A to pay. So, if company A will pay already, you will receive some check. But normally, there is also a letter, transmittal letter, transmittal letter, indicating that we are going to pay already 1 million pesos, for example, for the purchased goods with these details and etc. In which this check will go to the treasury or finance. And the finance will now deposit that to the bank if ever. So the check will go to the finance or the treasury, where the finance or treasury will send it to the bank, and the transmittal letter will go to the accounting department. And if it received the transmittal letter, the accounting department will now debit cash, credit accounts receivable, if it is confirmed. Okay? So the transmittal letter shall be confirmed, and the check shall be confirmed by the accounting department from finance and treasury. And again, that is directly related to the separation of functions. So the check shall go immediately to the finance or the treasury, because the function of the finance or treasury department is custody of assets, whereas the accounting department is recording. So the transmittal letter will go to the accounting department. And basically, this is by mail. And normally, such mail is being opened by the receptionist. Normally, there are some people that are assigned to open the mails. Okay? And such receptionist is the ones that will deliver the check to the finance and treasury and the transmittal to the accounting department. However, if there is no transmittal, the receptionist should make one, so that the accounting department will know that there is a check that has been paid by the client or the customer. Okay? So, that's how the sales and collection cycle looks like. Okay? So, again, if you are a system designer, system analyst, you have to know this, at least as a reference. Plus, you need to have the internal control concept, so that you can design something like this, a process flow. Okay? Now, let's have the last one. We have the payroll cycle. So, the payroll cycle is the giving of salaries to the employees. So, it has still a process. So, normally the process is step 1. Step 1, log in and log out details. And normally, the ones that will extract this from a machine, for example, if you have a log-in, log-out machine, is the HR. Okay? And after that, the HR will make a report. It could be a payroll report, wherein it is normally composed of the names of the employees, and then after the names, you will have some absences, leave, like sick leave and etc., or tardiness, something like that. And it will have a summary here. And normally, this particular summary here, which is the number of times that the employee is present minus these absences, leaves, and what do you call this, tardiness, it will reflect here, and it will be multiplied with the salary rate normally. So there is a salary rate here. So you will have a gross pay. So gross payment. But even if it is termed as gross payment, it is already net of the absences, net of the leave, especially if it is unpaid. Because if it is a valid sick leave or vacation leave, there will be no effect on the pay. There will be no deduction. And tardiness, of course, will deduct the time of the employee. Okay? So you have the gross pay. And normally, that's the only part of the HR. Because it knows the login and logout details of the employee, and it also knows the salary rate or the basic salary. So it will now be forwarded to the payroll department or payroll in charge. Payroll department is actually under the accounting department, wherein the payroll in charge or payroll department will make a sheet. Like there is a name here, and then the payroll department can have that gross pay from the HR, the gross pay, or it could have a name, and then absences, and then late, and then tardiness, and then gross pay. And after that, we have the deductions like SSS or GSIS for government employees, SSS, PhilHealth, HDMF or Pag-ibig, and withholding taxes. So, for example, this employee number 1, we have the gross pay here. Less this one, less this one, less this one, less this one, we have the net pay. So, all of the employees will have some net pays here, and you will have a total net pay. So, this total net pay will now be given to them physically, the employees, or else if you are already using the ATM machine, then this will be downloaded to their bank accounts of the employees. Okay? Of course, this SSS, PhilHealth, Pag-ibig, and withholding taxes, you will wait for the deadlines of this one. Like for the SSS, employee share, there is an employer share also. So, the SSS employee share and the SSS employer share, it will be added. So, if we have a total here, that's the employee share. You add the employer share. After that, you have to remit it to the SSS. Okay? So, there are a lot of transactions related to payroll because you just don't have, you don't have to just pay the employees of their net pay, but also you have to remit these things. So, SSS, PhilHealth, and Pag-ibig has employee share and employer share. And it should be remitted to those government agencies here in the Philippines. And then the withholding taxes should be remitted to the BIR. And they have different deadlines or schedules. Okay? So, after that, the total net pay, if ever that is physically delivered to the customer or to the customers, to the employees, then the employee should sign. So the pay will go to the employee shall sign, and if the employee is absent already, then it will be kept by the payroll in charge, I guess, or the ones that is under the finance or treasury, so that if the employee will become present, the employee can get it from them. Okay? But then again, it's much better if the payroll department does not have any custody function, because supposedly the payroll department should be recording only under the accounting. Okay? So, before going to the employee, by the way, after computing for the net pay, or before remitting these things, so for the net pay first. So, the net pay, if there is already a payroll sheet that is fully approved and fully verified, that payroll sheet, you will have a disbursement voucher normally. And then, the finance department or the treasury department will make a check if ever you're going to physically give the salary to the employees and you're not using ATM. Okay? So, the attachment is this payroll sheet that is approved, and then the disbursement voucher, and then the check. And then the check will now be encashed, and those encashed salaries will now be given to the employee. The employee will sign, and if ever the employee is absent, the money will be stored by the treasury department or finance department until the employee comes. So basically, this is the payroll cycle, and this usually happens every 15 days. Sometimes there are employers that gives their uh, employee salary every week, based on my experience also. So as a finance manager, a new finance manager actually in our company, I am fixated to these particular processes because I think in order to become an accountant or a finance manager, you should always think that the recording is always at the end of the transaction process. So you need to start with the process beginning before you go to analyzing how to record it. Okay? So that's it for this video for the transaction cycles. So the next video that I'm going to upload is related to testing controls, whereby you are going to be asked about situations related to transaction cycles and internal controls. Okay? And you're going to assess if ever there is a weak internal control or a strong internal control, or if there should be an improvement, something like that, or is there a violation on the internal control principles that we have talked about in the past episode, something like that. So in order for you to be guided on how to answer situational questions related to internal control and transaction cycles. Okay? So that's it for this video. So if you learned, please click like and then comment if you wanted to comment, and share and then subscribe. Thank you.